What's up, boys? I'm back at it with another recap for today and what has happened. And I'll just tell you guys right off the bat, I took no trades, but I'll tell you guys why. And I think it was a really shitty day to take any trades. And here was a trade. There was a couple trades you could have taken that I ended up not taking. But I'll tell you guys why. I did not take any trades and how it actually helped me into not losing anything for the day. Obviously, I didn't make anything either, but we'll get right into it. First off, we had ADP non-farm at 7:15, and then we had unemployment rate at 7:30 a.m. Central Time, so 8:30 Eastern Time and stuff like that. But I didn't really care because, it wasn't near market open at all. Anyways, market opens at 8:30, obviously. What do we see in the hourly time frame? Hourly time frame, we already took out things pre-market, correct? But if you guys look on the hourly time frame, we went up and filled this hourly fair value gap. So usually when I look at hourly lows, I care about this. So what do I do? What do I see? I see this and I see it get swept out. Cool. This would mean in turn I can look for a 15-minute to get hit and then to continue to the upside. But what did I also see? I also saw this hourly fair value gap get hit. And this was on NASDAQ as well. So I saw this hourly fair value gap. Or this was on ES as well, sorry. And then I saw this hourly fair value gap. I saw this. I saw this. Overall, the market doesn't look terrible. It looks like it's in a good standpoint. And as you guys can see, I go down to the 15-minute time frame. Since we already filled this hourly fair value gap, I am wanting price to hit this 15-minute to continue the downtrend to the downside. For NASDAQ, same exact thing. 15-minute, 15-minute. For me to be bullish today, I had to get this hit, this hourly low hit, and I had to get this hourly low hit. And without that, I wasn't going to be bullish. So, as you guys can see, let's go over to NASDAQ. I'm waiting. This whole time, nothing gets hit till 9 o'clock. And then obviously, it goes down. Doesn't hit anything. Didn't enter. No entries. I didn't trade at all, as you guys can see. It hit this. And right here, what do I need? I need a retrace. By the time I got a retrace, there wasn't anything for me to look at. And look at this. ES didn't even take out the highs. It made new 15-minute highs, and it still didn't hit anything. Instead, it went down. Meaning, I was just like, man, I'm just not going to trade today. It was so pointless to actually take a trade for my strategy and stuff like that. But I can see where some people would have taken a trade because there would have been a complete shift in the market if you were looking at it from a bullish standpoint. Say you didn't care about that fair value gap at all, correct? You could have looked at load. You could have looked at this 15-minute low getting filled, this 15-minute getting filled, and this 15-minute getting filled. Same thing on ES. This getting filled, this getting filled, this getting filled. As you guys can see, before it sweeps out this, it takes out this liquidity right here. Meaning, price theoretically should make it to these highs. Same thing on ES. It already completed a retrace. Go down to the 1-minute time frame. What do we see on ES? Nothing. There is nothing on the 1-minute time frame. Play it out, play it out. What do we have? On ES, we have this fair value gap. Cool. We have this fair value gap. Does it get respected? Nope. What do we have on NASDAQ? NASDAQ's a little bit different. NASDAQ, we have this gain field. NASDAQ was looking a lot cleaner today. And he could have taken this trade. This inverse. Bam. So what does it do? It disrespects that fair value gap, turns it into an inverse. Whoa. What am I doing wrong? Let me think here. Yeah. So never mind. As you guys can see, you could have entered right here, and you could have put stops below the inverse fair value gap. But then what would you have targeted? Probably these highs. So you would have had 98 ticks, 98, and say you're like, fuck it, I'm gonna target the hourly. Lot better risk to reward. It looks like a decent trade. But at the same time, why would you have these 15-minute confluences for your bullish trade when it already filled this hourly fair value gap partially on NASDAQ and on ES? Like, I get that it did fill this 15-minute, but at the same time, you should have been looking for the hourly to get filled instead of the 15-minute due to it already hitting that hourly fair value gap. So if you would have taken this trade, since you wouldn't have went like this, that would have been a bad risk to reward. This would have been a bad, terrible risk to reward. 0.49 risk to reward and 0.438 for the first TP to get hit. So if you targeted this hourly high, let's see if it even would have made sense to target the hourly high. Honestly, I don't see it making sense at all. I don't know if you guys see anything different, but for me, yeah, I'm not seeing anything that makes me want to target the hourly. But anyways, let's target it. Look what happens. Price goes down. Goes down even more. What does it do? It's going for this hourly low. What happens on ES? Almost hits the hourly low. Barely, almost hits it. Hits the hourly low. NASDAQ. What happens on NASDAQ? Still doesn't hit the hourly low. Still no hourly low. Nothing. But guess what it does? Goes back to the uptrend. Takes a while. And then guess what? Falls back down. This is not good market at all for my strategy. So in turn, I didn't take any trades. I could have taken a couple of trades, but none of them made sense to me. So I didn't take anything. And this would have been the only one on ES that would have made sense to take. And it would have been this long right here. Because the hourly fair value gap, or hourly low, finally gets hit. Let's get rid of some stuff on my screen. That hourly low finally gets hit. NASDAQ, it doesn't get hit, but it shows SMT. Meaning, oh, yeah, I'm going to take a long. But then, NASDAQ already took out that high. Does that really make you want to get in for a trade? The probability isn't there. And you probably would have put your stops close to right here. You want to put your stops right here because you're only 26 ticks away. I mean, look at the 5-minute. The 5-minute's showing this fair value gap getting respected. You're going to want to put stops like right here. And then what would you want to target? Probably this hourly high. You would think, hopefully. So let's take this trade. Keep going, taking forever. Still going. Hits take profit. But what are the chances that you put your stop loss right here instead of right here? Not very high. Say you put your stop losses right here at this doji at the low of it. Great risk to reward trade. But it's 940. You're not taking a trade. You shouldn't be taking a trade at 940. You should be doing a lot better things with your life at 940 because the probability of taking a winning trade that late in the day is very low. And it's all about probability. So it's like, it's just unnecessary. That's all I got for you guys. No trades from me today. Hopefully you guys took a winning trade. If you guys took any, none of them went to my setups. And yeah, that's all I got for you guys.